So we should be live. There you go. Guys, good morning. Let's get ready today and let's have a look at these markets, all right? First and foremost, we're going to look at US 30, all right? US 30. So for those of you who don't know, for some of the new people that are in the group, US 30, we're talking about the top 30 US companies, all right? Which is as we can see from this chart, have a look. This chart is going up and up and up and up and up and up and up, all right? Look at its trajectory. The reason why its trajectory is like this is because it's designed to go up and up and up. It's the top 30 companies. If you're number 30 and you stop performing and you fall to 31, well, somebody takes your place. And every single morning, these companies sit around the table and they're not trying to work out how to make less money. They're trying to make out how to make more money. All right. So they are designed to continue to, obviously they are victim to the world and fundamental things such as COVID-19. All right. But the reality is that these companies are, ultimately solid US companies. You can name a couple companies from the US 30. You can name a couple companies that occupy the US 30 that are getting busy. Who can name them? Let's go. Name one. Who's got one of them? Who's got one company? Apple, Monster company. Who else? What other companies can you think of? Nvidia, Monster company, did amazing things last 5 years. What else? Tesla, what else? Anybody else? Can't think of anybody. Boeing, who else? Just keep going. Loads of them. Think about just look around your bedroom or think to yourself in regards to some of the larger. What about Microsoft? What are you guys doing about Microsoft? I had something really interesting about Microsoft. It was that Bill Gates was he got into computers very early because of a program that was launched in his school about computers. And that program was something like 1 in 100 schools, and his school just got chosen. If it wasn't for that program, he would have never got into computers early. And ultimately, probably would have never been Microsoft. And the world changes. Maybe there'll be a different company for sure, but the world is a completely different place. It's quite interesting, It's quite interesting. Let me just see if I can get. Here we go. Have a look. Microsoft, cool. Visa, yeah. Who's got Visa on them in their back pocket? JP Morgan, yeah. United Health, Walmart, Johnson's and Johnson's. Hopefully nobody's using that baby powder again. But once upon a time, that baby powder was getting dosed over us. All right. Salesforce, Coca-Cola, McDonald's. Think about the biggest company. Walt Disney, yeah. Intel, yeah. Nike, yeah. Who's got some Nike? Who's sitting on some Nike now? Who's wearing some Nike now? American Express, all right. Goldman Sachs, Boeing, huge companies, all right. So therefore, what's going on in these companies? They essentially are leading the pack. They're the heavy hitters, and they cover the various industries. So just similar that to your Bitcoin scenario. When Bitcoin starts going to shit, then other coins are kind of going to get taken by that smell. Yeah, they're going to get hit by that whiff. Yeah, it's quite similar in these industries. So therefore, there are heat maps. You can get some heat maps for these type of industries that shows their size. Because even within this top 30, there are certain companies that occupy substantial more size than others. Do you understand what I'm saying? Yeah. And therefore they dictate quite a lot of things. So therefore, if you're trading US today, as a matter of interest, you should be, to be fair, if you're a good trader of US 30, you can also be well positioned in regards to if you're a stock investor in stocks, because you kind of have an understanding of you should have an understanding of what's happening with these big companies. To be able to see when's a good investment, etc. But let's look at the US 30 from a technical perspective, okay? So from a technical perspective, we can say this market overall has been bullish. It has been making higher highs and higher lows, okay? This US 30 is a basket of those 30 companies and how they're performing, all right? If we scoot down, all right, to our daily time frame, straight away getting into it of what's relevant to us, we can see that this market has been bullish. These companies have been doing well, okay? Since, October 2023, we've seen a big bullish push in the US 30 market. Okay, we've seen that market making higher highs and higher lows and higher highs and higher lows and really going for it to the point where, have a look, to the point where US 30 has reached some new highs. All right, new highs. Let's do a little line like this. All right, US 30 has reached some new highs, all-time highs in regards to how well these markets are doing. This is our daily time frame over here, and we can see how this market is near the bottom of a range. Okay, it's tightening up. I'll try and draw these lines a little bit better. This is a bit of a funny angle. Let's do this. Let's do this. And let me hold control. I'll pull out a parallel line, put us at the top of that range. And at the moment, we can see that the market has made a higher high, kind of retraced here as it kind of went sideways to touch the bottom of the range, and then made another little push. And at the moment, we're seeing quite a tight range in here. The market's quite tight in here at the moment. All right. Now, we can see that these markets are, like I said, all-time highs. This level here is an all-time high. We go to our 12 months, monthly, weekly. There's no data behind it, you see? No data behind this level up here. Okay, so this level for US 30 is all-time highs. Now that might be spooking some investors. Investors might be thinking to themselves that this market is overcooked. We've been hearing this. That people are saying this bubble's going to burst and all of these stocks are going to come tumbling down. Possibly. Because obviously we've looked over here and we understand that above these levels liquidity stands, and the market grabbed that liquidity, had a little bit of a retracement, sideways action, but said, you know what? We are still going, mate. Boom, 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 and kept pushing in this direction, kept pushing over here. Now I'm going to superimpose our Dixie, which is our dollar index. All right. So a dollar index is an actual, the actual strength of the dollar. Yeah. It's showing you the actual strength of the dollar, the Dixie, and the strength of the pound would be the Bixie, and the strength of the Japanese yen would be the JXY. They call it the Jixi. Yeah. And you can keep going for all different currencies. Now, we understand that the US 30, we spoke about this, and the dollar index have what type of relationship? Can anybody say what type of relationship they have? Can anybody say what type of relationship dollar and US 30 has?
An opposite effect.
Yeah, I mean, the language I'd like you to use is an inverse relationship. So as you can see, when this dollar was going up here, which is the orange chart, the US 30 was going down. And can anybody give a very brief insight into why that may be?
Sorry, I don't think you're recording as well, Jay.
It should be. It is recording. I'm getting a little signal saying it's recording. Why do you think I'm not recording?
Okay. I just can't remember pressing AI. Maybe my bad.
Okay, no, it should be recorded. It should be recorded. But thank you for that. Definitely my camera, for whatever reason, keeps locking off. And I don't know why that is. Just trying to see why my camera keeps turning off. I'm trying to reboot it. Because, there you go. Yeah, my camera's struggling. It's not coming on. Hopefully it stays on. All right. If it does go off, let me know. So this inverse relationship. Can anybody quickly let me know why there is a potential inverse relationship? Here it goes again. This is off. I don't know why. I don't know why it keeps cutting off. Does anybody know what is the inverse relationship between US dollar, the actual dollar, strength of the dollar, and US 30, the top 30 companies in the United States of America? Anybody know? Can anybody tell me why that might be the case? Think about it. Everything I'm asking to you, and remember, these markets they're not brain surgery. They're not. You really have to just think about it from an opinion. If the dollar, when the dollar gains strength and gets really, really strong, that these US 30 stocks start to fall. You mean, why? Why do we think that's the case? I want you to understand. And if you don't know, tell me you don't know quickly so I can explain.
Jay?
Let's go, King Louis. Let's go.
Yeah, because things get expensive for these companies. Yeah, especially when they're exporting, or importing. The costs are more when the dollar is strong. When the dollar is weak, the Americans come over, spend their money. because they've got more money in their pocket.
Yeah,
That is why it affects. That is why it affects companies if the dollar is strong. If it's weak, they're laughing all the way. Things get cheap for them.
think about it from foreign investment perspective. We spoke about this. At the end of the day, if the dollar gets really, really cheap, what do you want to do? You want to go and start balling out and buying and going to America because your pound has more, you got more buying power with your pound, haven't you? So therefore, you go to America. That way you go, and I'm going to New York, and then you go to New York, your $100, and your $100 or your £100 is worth $150, and you feel like you're balling out of control. Yeah, you want to invest into, you want to buy Amazon and buy Apple and buy Nike. You understand what I'm saying? But when it's expensive now, and your £100, for argument's sake, is only worth $90, it's not being the case, but let's imagine it is, you're not in a hurry to go and go over there and feel like a pauper because your Nike trainers ain't necessarily falling by the same capacity, same amount. They're going to stay at $150. So you're going over the, everything's a bit more expensive from a foreign investment perspective. And also, what Brother Alan said in regards to, imports and exports and, costs and certain things like that. Okay, so therefore that can give us some sort of insight into the markets because we can look at this dollar index and say, okay, if there's an inverse relationship, what's going on right now? Now, Alan, we can see this tail end here that the market, this dollar index was bearish, losing strength. We've seen a little bit of it gaining strength over here, all right, which is a little bit strange because it's gaining strength. And also this market here has gained a little bit of strength, which is a little bit, going against what it normally does typically, okay? So in my opinion, something's overcooked. Yeah, something's going to change, all right? So let's get rid of that. Let's get rid of this now. I'm going to delete it, remove it, all right? And just look at this dollar index, all right? I'm in US 30. So US 30, we're here on a daily time frame, all right? And we can see this tightening of this bullish momentum, making higher highs and higher lows. Let me drop onto my 4-hour time frame. Now you can see market structure a bit more clearly. Higher high, higher low, higher high, higher low, higher high, higher low. And we're just getting to this little area right now whereby there's a little bit of sideways hokey-cokey action happening in here. All right, a little bit of sideways hokey-cokey action, but we are at the bottom of that yellow range. We're at the bottom of that yellow range, which is buy territory, but we've seen some sideways action. Now, personally, let me show you how I'll trade this. I'm going to put click right. I'm going to add an alert when the market crosses down, and I'm going to add an alert when the market crosses up above this. Why? Because the market is currently going sideways at the bottom of a range, at the bottom of a range, the market's going sideways. And sorry, where's my other alert? Did I just put that alert in? Where's the other alert gone? Where's this? Where's this? Get rid of this. Oh, sorry, the alert's gone on the line. That's fine. All right. So I want to know what this market is going to do. I don't really want to get involved in here. All right. I don't really want to get involved in here. The market is making ever so slightly higher highs. Yeah, ever so slightly higher highs, but it's still a bit, yeah. I want to know what it does outside of it. I want to see either break out to the downside, okay, or break up above and start doing something, okay? So at the moment, I'm not going to be in a hurry to jump into this trade at the moment. On a smaller time frame, yeah, there's opportunities. There is, if I was to draw some lines in here, the market is currently trading within this level and this level on a smaller time frame, okay? And the question is, what is it going to do from here? If I was to drop my time frame down and draw some lines, look at that. Just going sideways, this hokey-cokey and doing a little shuffle. It's not, the most attractive thing to say, yeah, I can't wait to get involved in it. Do you understand? So that's not a problem if, just like Jason said to me, you stay away. Stay away. Wait till it actually does something that you're interested in. I might be able to I'll put a smaller alert in here, just underneath this level. But to be fair, yeah, I don't really care too much. It's not too great. I'm going to move on to something that looks a bit greater, a little bit more attractive. I've got my alerts in. Guys, learn how to use your alerts. Your alerts are your AI. They're your algorithm. They're your way of keeping an eye on the market when you don't have to keep an eye on the market. Yeah, you don't have to sit there with your mouth open looking at the candles. You place your alerts. You make sure that they are audible or that they notify you some other way. For example, have a look when we put our alerts on. I've mentioned this before. You can get all types of notifications and notifying the app on your phone You can get it to send you an email, all right, which I actually need to turn off because I get far too many emails filling up my inbox. You can play a sound. It can even send you a SMS message if you want to know how to set it up, all right? So, yeah, I'm going to leave that for now. I'm going to move on to another thing, all right? Let's go and look at, is there one in particular? I'm going to look at something random. Anything in particular? I'll tell you, we'll look at gold and have a look at gold, see what it's saying. Now, gold is normally that sexy asset everyone wants to be. Say, I'm a gold trader. I'm killing the gold game. I've seen man give themselves names like, I don't know, the gold king and all them kind of things there. Because it's sexy. You trade gold. What do you trade? I trade gold. Okay. Now, gold is notoriously volatile, moves a lot. So you can make a lot of money from gold. All right. Volatility as a day trader is good if you know how to tame the beast. If you don't know how to tame the beast, the volatility will throw you straight off the horse. You land on the back of your neck and you'll be wheeling yourself around for the rest of your days. Okay. So therefore, you have to make a decision. Are you somebody who understands how to trade this type of volatility? Yeah, how to take into consideration. Remember, it's the exact same strategies, exact same markets. It's based upon market structure, price action, and candles. Yeah. However, each one of these markets they're like children. All your children have, they're flesh and blood and 2 legs, 2 arms, and that, hopefully, and everything's good. But they have different characters. They have a different soul. Yeah, whereby one of them's just a little bit naughty, or one of them's quiet, or one's shy, or one's loud, and you have to understand those nuances, those characteristics, okay? So therefore, you can trade any markets, but you must take some time to acclimatize yourself with these characteristics. So once upon a time, gold was trading and we identified these 3 heads here. 1, 2, 3. These were 3 equal highs. We was calling them the 3 kings. And we knew there was this, we was like, look, this level here is going to get captured at some point. At some point, the market is going to come and run these levels. It's going to come and it's going to take these equal highs. Nam, 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 nam. This was a lovely liquidity grab that went and took those. But since then, the market's done out. It grabbed and took this liquidity here in the middle of a range. Look at these 2 yellow lines. We're kind of in the middle of a range. Okay. We saw previously a little liquidity grab to the bottom. Where it grabbed this liquidity down here, touched the bottom of our range here, this yellow line, and pushed up. All right. And at the moment, if I zoom down on our daily time frame, or zoom in, I should say, on our daily time frame, have a look. Have a look again. Why? When Jason tells me and says to me, where the markets are kind of like, yeah, not really presenting anything to me, well, I kind of get it, because they're not really like this market here is, let me do that dark color. It's kind of doing the hokey cokey in here. All right. Let me drop to my 4-hour time frame. Look at that. It's kind of just doing the hokey cokey. We can see a huge imbalance down here that hasn't fully been filled over here, a huge imbalance. And one of our new members did say to me, I need some more information and to understand imbalances. So I'm going to do that in a minute. We're going to go back over the imbalance because I truly believe if one person doesn't understand something, it's possible that somebody else doesn't. Maybe I didn't communicate it in the right way, or maybe they missed it. So we will go back over the imbalance. All right. But there's a huge imbalance that's sitting here that hasn't been filled. And the market's just been kind of dancing around, trading within potentially this wick high and this low over here, and just thinking about it. I'm not going to be in a hurry to get involved in this thought process. I'm just thinking there will be smaller opportunities. I'm not disputing that there isn't a small little scalp here for a certain amount of pips, but at the same time, we're in the middle of a range, just doing the hokey cokey in gold in the middle of a range. And I personally don't need to get involved in that. I hope you guys can understand why I'm saying this, why this doesn't look fantastic to me. Yeah, even if I drop my time frame down to an hour, yes, there may be some smaller opportunities. All right. But by and large, this is not screaming to me like I'm the freshest, softest, sugar-coated donut in the window, and I just look absolutely delicious. I'm kind of looking in the window and it's looking a bit dry up. Like it's been sitting there. I'm seeing flies. I'm like, it's the last donut in the window. I'm like, I don't think I really want that donut. Yeah, it's kind of looking like that at the moment. So it's just kind of hokey cokey. Now we understand range wise, what we do? We sell at the top of a range, we buy in at the bottom of the range. The problem is this is a range within a range that is just going backwards and forwards with huge velocity. Look at these wicks. Like look at the wicks on these things on a 1 hour, on a 4 hour time frame. Seeing these wicks going here, seeing some wicky spikes going here. Let's go on a 1 hour, zoom in a little bit better. Look, it's not great. It's not something that I'll be, eager to get involved in. So once again, what I'm going to do is going to put my AI, my own AI, my alerts to watch these markets when I'm not looking. I'm putting an alert above this little range. I'll put an alert below this little range if it decides it wants to actually come and close that 4 hour imbalance properly. All right, closing down. Well, my camera just doesn't want to show my face. It's hating. I'm going to do that. It's going to just lock itself off after a while for some reason. I think it's some sort of software driver issue. All right. And I've got 2 alerts here, pinching this tight range here. And that's enough for me. I really don't want to stand around and try and get involved. Like, you don't have to wrestle with the markets. It's unnecessary. Why should I wrestle with a market? Yeah, I don't need to wrestle with it. I want the market to show me something so I can take advantage of what it's doing. I don't want to wrestle trying to tame it. I can't tame gold. It's impossible. All right. Let me go and look at another pair. Euro, JPY. All right. And see the way I'm skipping through and see how I'm being discerning. US 30 is crossing down, it says. Let's have a quick look at US 30 crossing down. All right. Let's have a quick look at US 30 crossing down. I'm going to go to US 30. That was my AI, you see. My AI, I say AI, but it's my alert that told me about that. I wouldn't know about if US 30 is crossing down or not because I was trying to get to Euro JPY. But my alert's just rung. And it's giving me a little notification that, that little level that I put underneath here, that the US 30 is breaking that structure. Have a look. Now, to be honest, I still really don't want to get involved because we're still trading within this range. I just wanted to know whether this market was going to be breaking structure to above this level here on this little angle, or the market's been going to be breaking down. I really, to be honest, only interested in this market when it breaks outside of this red box. I really want it to break outside of this red box to let me know something. At the moment, it's still within that red box, and we're getting a little break of this structure here, a little indication of what it wants to go and do. And there could be a potential correction and continuation, but we're in the middle of a range. It's not great. All right. So cool. Even though my alert rang, no problem. So here's EJ. All right. Let's delete everything off EJ. Pow. Let's go to our larger time frame, understanding the Russian doll. We need to see what the shape of the biggest doll. What is the shape of that biggest doll? In my opinion, that biggest doll is this shape. You ready? That's the shape of the biggest doll, in my opinion. That's the ceiling, that's the floor. All right, in this particular market, going all the way back to 2003. Now, within that, there are smaller dolls. There are smaller things happening. Like, yes, this market has been extremely bullish from COVID. Since COVID, this market has been going up and up and up and up. Maybe because, I don't know. There are going to be fundamental reasons for that. Yeah, I know Alan's going to be able to tell us about Japanese yen and why, it's been lost so much strength against the euro. But the reality is that we understand this bigger Russian doll. All right. Shall we put our Russian dolls again or something? No, we get it. I don't care. I'm going to show you it again. All right. So it sticks in your brain. Russian doll. And you're always thinking about the markets in this reference of the fact that there is a bigger something that is going on, and you need to make sure that you understand what that bigger something is happening when you're trying to get in the markets. You want to be able to turn around and say, okay, well, I can see that this is the larger structure. Where's my favorite Russian? I need to really bookmark it, shouldn't I? Somebody remind me to bookmark it today. All right. Let's have a look if I can open that image. There you go. All right. Our Russian doll. You see how they're even standing beside each other? This one's even better. We need to know what's happening in this big doll. So therefore, when I look at that EJ, this is the big doll. Now, of course, this market could smash through that ceiling and do something else. This is going all the way back to 2007. But for now, this market's kind of been going sideways within this range. Now, on a smaller time frame, yes, we could turn and say maybe the angle of this market is doing this. Okay. based upon how I've done that, I've touched this last low before this highest point on the much bigger picture, and I've done that. And on a smaller time frame, we can go and we can knuckle down and we can put some more lines in here. So straight away, we're understanding each one of those Russian dolls of where the structure is. Okay, we're looking at it and we're thinking to ourselves, we're trying to understand the trajectory of the markets. Because remember, the markets do change. From 2003, 2007, things are going to change in the world. Things are going to change in euro. Things are going to change in the Japanese yen. The world's going to change. So these angles can always, you see how, look, this market was going in this little direction and it started to accelerate and start to accelerate further. That's because things happen. Things don't stay the same. All right. So on a daily time frame now, let's see what's going on. So on a daily time frame, we can say this market has overall been making some higher highs. All right. And we can see this market has been making some overall higher highs and some higher lows. All right. Some higher highs, some higher lows, some higher highs, some higher lows. So at the moment, we're at the bottom of this range, the bottom of this range here, which I've drawn really badly. Try and fix it. And I'm going to highlight it a bit thicker so you know which one I'm talking about. And the market has been trading up within this little range, like something like that. Okay. So we're near the bottom of that range at the moment. You can look how the market came down. Here, have a look. Whoops. How the market came down. Was making lower lows and lower highs here. You might not be able to see it on the daily time frame, just like red candles, but on a smaller time frame, I assure you, there is lovely market structure of lower highs and lower lows coming in here. And then it came into here and it started to go sideways for some time period, kind of in here, until we saw an indication, we saw a correction and continuation. The market started to push up. Okay, let's have a look on a lower, smaller time frame. Go to my 4 hour. Look at on my 4 hour now, that little, all those red candles. Now we can see a little bit better structure coming in here. And here's two lines I'm going to put one like this. I'm going to make it a different color, like so, okay. And also gonna, you could potentially put one in like that. Why have I put in one like that? Because I've touched this last high before this lowest point. Okay, and then we can see here, but ultimately the structure is all the way over here anyway. All right, we can get some smaller structure in here, but the market's going sideways. Have a look at our indication, correction, continuation. The market's pushed there, came all the way down. Look back at that level here. Our aggressive stop would have been below this low, spread ×2, and taking into consideration any imbalances before we seen below here. We possibly would have still been in the trade here as the market pushes up, but the market is still a little bit like all the markets at the moment, a little bit, because we've come from that consolidation essentially, and we've kind of been jumped into another little sideways little patch in here. All right. So realistically, right now, if I was looking at this in present time, I'm interested to see this market break outside of this little green box here. So I'm going to add an alert, crossing up, and add one, it's crossing down. These are looking in the market for me. All right. Now, on a smaller time frame, if I drop to my hour, yes, we might be able to determine and say there's some smaller opportunities. But right now, we'd be concerned, we'd be asking ourselves the question is this market going to break above these highs? That's the question that we're asking ourselves. I believe so. I believe it's made a higher high, potential higher low. We've seen some structure, like this structure here. Have a look. Only broke here, only broke and closed above here. Then we saw a little bit of a retracement here. I'm a little bit concerned that we might do this, and then start doing this. Okay. But for me, I don't need to fight it. If it isn't something that looks very clear to me, it's for something that looks very tasty to me, the market is waiting for US CPI out at 130 today. Well, there you go. You see, that's come from our resident specialist, the fundamentalist, Alan, who's spoke to us about US CPI. Let's have a look on our economic calendar to understand what's going on, which is myfxbook.com/forex economic calendar. And let's have a look. Well, of course, he's correct. Not that I'd ever question him. But look, CPI. CPI coming out today, all red folder news. Remember, yesterday was quiet. There was no red folder news, and the market did nothing because the market's been sitting around and waiting for some of these key performance indicators to come out of the industry to show us what's going on. And CPI at 130 is one of them. So what we might see is we see all these markets not doing certain things, sitting in consolidation, moving a bit funny because they're waiting for this information before they start to do something. So there you go. All right. That was told to us by Alan. All right. And that makes sense when I'm going through these markets and I'm like, yeah, what's going on with them? They're all like, nothing looks too interesting. All right. So it's essential that you can do the same. It's essential that you don't get frustrated and think to yourself that you just FOMO, you need to take a trade today, because if you don't take a trade today, somehow you're not making any money. Let me say how you're not going to make any money. It's when you lose, when you take your £100 to £90, that's going to sting. Yeah, you're better off leaving your £100 there to fight another day. All right. So right now we're at the top of a range potentially. Yeah, even though it's not a range per se. You know, we've got this little liquidity grab over here, some wick action inside here. You know, but again, I'm not in a hurry to get involved in this market. Well, look at us. We're consolidating here on a smaller time frame. Have a look. On a smaller time frame, the markets came up here, looked like it was making higher highs, higher lows. I got to the top of the range, yeah, went sideways forever, pushed down, grabbed the liquidity, started pushing back up. Are we going to break these levels? I believe we are. Okay. However, it's still not fantastic. Like if I drop to my 50-minute time frame, I believe that we're going to start making some higher highs based upon technicals, not based upon the fundamentals of what that fundamental CPI stuff might, even though it's EJ, we understand that, you know, the United States are a barometer for the entire world of what's going on. All right. I believe maybe we're going to tap in here and start pushing. I'll tell you what I'm going to do. I'm actually going to place an alert underneath this little low here. And I'm going to place an alert above this high. There may be a smaller opportunity for me to get in for the buy, because I believe this market looks to me like it wants to push up in here. However, I don't know. All right. And it's not giving me definitive, I know what's going on. Have a look at these two highs. What does that look like that might be sitting above there?
Pool of liquidity.
Yeah. A pool of liquidity may be sitting above these equal highs, okay, which is a draw on price where there, you know, a lot of orders are sitting here trying to push the price down. And potentially, I think that this market could, even if it's just a case of grabbing this liquidity, nam before coming down, but it could push up into that level, which from where we currently are, maybe a move of, in this industry, EJ, in this market, 25, 30 pips. All right, which is in EJ a lot of pips. It's not huge, but it's, you know, it's something. Okay. So on a smaller time frame, maybe there's some sort of opportunity here. But again, nothing to write home about. Nothing to go crazy about that. Oh my gosh, I just can't wait for EJ to start breaking some structure. Look, I'm on a 5-minute time frame. I can't even see no clear structure in this little push down here to be able to get a decent entry. On a 5-minute time frame, the structure is all the way up here. Therefore, like, you know, by the time it pushes up here, it's already grabbed that liquidity and it might be coming back in the opposite direction. For me to get involved in this right now, I'd have to be very small. Looking at the 1-minute time frame. Look, now I can see some structure. Now possibly have a look. And we can watch this. We can watch this. All right. We don't have to get involved in this. I'm not encouraging you to start hitting the button. Have a look. Here, we can see I've drawn in some lines. I'm drawing in some lines because those lines let me identify where there's potential structure. Now we're just getting an indication now with this little break above this structure. It hasn't quite closed on a 1-minute time frame. Just about closed. And based upon Owanda's candles, which are not necessarily set in stone, they've just about closed above this little wick high. So after that little indication, which is very, very tight, I don't like to see it so tight, to be fair. I'm expecting to see a correction, right? Which might be correcting into this little bit of imbalance in here. And then a potential continuation. But that will be on the 1-minute time frame on the basis that I was trying to capture at least these equal highs over here. Now, I don't want you on a 1-minute time frame, but I'm just showing you that even on a 5-minute time frame here, it's not giving us great information to get involved in this trade. I will watch it. We'll watch it here and see what happens, just to see our strategy play out. I'm going to put an alert here if it does start to cross up, but I am not in the trade. Yeah, I'm not in the trade, and I'm not necessarily you should get in a trade, into the trade. All right. But the point I'm making to you is that we are now scanning these markets to try and see if we can make a decision on what we're looking at today. All right. So I'm going to go over here. I'm going to go to my watch list. We've looked at Euro JPY. We haven't looked at I'm going to look at NAS, which is going to be quite similar to US30, but it might be different, but similar. Have a look. Maybe this is our little correction here. Maybe, baby. But we will come back to it. I'm going to look at NAS. All right. Let's see what NAS is saying. All right. So I'm going to scoot all the way out. I know there was some avid NAS traders here. I know at a point Alan was heavy in NAS. Okay. Etc. And like I said, they are all very similar, but they have their own characteristics. They have their own little nuances. So what have I done? What do you guys see me doing every single time? The first thing I do is I'm scooting out. I'm zooming out. I want to see that Russian doll, the big one. What is the big one doing? All right. And the big one, pause, is we can see the market is definitely bullish. Yeah, making some higher highs, okay, and some higher lows. But look, so for example, I might turn around and say, okay, this is the bigger Russian doll, and this is the range of the bigger Russian doll. Those two there. Let me make it. For example, this is an example. This is the bigger Russian doll. This might be here. You know. Let me make it 2. I'll make it a slightly different color. Make it this color. I can't see it. Make it this color. This might be the other Russian doll inside of here with the potential to bust its head out of this other blue Russian doll. And then we're going to go over here and say, okay, let's look at this smaller Russian doll in here, which I'm going to make it pink. And that smaller Russian doll, have a look, is doing something like this, if I could draw it properly. Yeah. And potentially trading within this little right here. So for example, right now, that I'm thinking to myself, are we gonna bust through this bigger Russian doll head ceiling? Because then it just means that how I've drawn that Russian doll ceiling is slightly incorrect. That is not necessarily the ceiling because it's busted. Oh, it's making a new ceiling because things change. So therefore, me going all the way back, all the way here, and slapping this line on top of this high, because it's this angle here, has no relevance anymore because this has gone all the way back to 2008, 2007. Yeah, a completely different time. But I'm concerned that we're potentially at the top of that Russian head, that Russian doll, and we might boing and decide we want to start coming down here. And then the next question I ask myself, okay, if that is the case, if we started coming down here and breaking structure, I ask myself, are we going to break outside of this little pink Russian doll? And if we do, I go, okay, no problem. Well, then we're going to this bigger little Russian doll base over here. Can you see how basic lines, basic market structure gives me that bigger picture? Now, I'm not just going to be getting in here for the sell right now because we happen to come towards this blue line, because that blue line is just a line I drew on my screen. That blue line has no more value than my opinions this morning. All right. However, it gives me a guide because right now I can look at this and I can say, okay, maybe I'd start getting into this trade if I start seeing structure being broken. Let me drop onto my 4-hour and have a look. All right, so on a 4-hour time frame, now I'm getting more detail. Now, we all know how I'm going to draw my line right now from this level. I'm going to draw a line like so from down here, touching like this. Why, Jay? Why are you drawing your line like that? Because I need to touch this low area here before this highest point. Okay, no problem. So if that is the case, that's what you've drawn, we can see that currently the market is trading within this low, this high over here. And on a smaller time frame, if I want to get more detail, on a 1 hour, I'll have a look at how I draw the line. I'd make sure that this line was touching this point here. All right, which is the last low of some little sideways consolidation touched here before it pushed up into this level. It broke that structure, gave me an indication. All right, gave me a little bit of a correction. You know, maybe not as deep as it could do. There's some imbalances up in here. And it's given me a bit of a continuation here on a 1 hour time frame. Okay. But I would be a bit concerned to get in here on the basis that that bigger Russian doll level is just here. It's this little low over here. So even if I got in and it started going well for 5 minutes, it might decide to boing, smack his head on that structure, and then decide to come all the way back up in here, tapping into some of the concerns I had anyway, this imbalance that was in here, before deciding to continue. So I wouldn't be in a rush right now to just hit the button unless I'm placing my stop above that level. So that even if it comes down here and I start going, well, yeah, I'm in profits, and it hits this little ceiling over here or floor, and this has to come back here, or better still, it captures that liquidity below that level, like so, and then starts to come all the way back up in here, and then starts to go down here, then I'll still be good. Or if I was really, really eager, that I got into this trade here very aggressively, like so, but by the time I capture any liquidity over here, I'm going to be concerned about this kicking back on me and coming potentially up in here, closing some imbalance, some inefficiency. Now, Alex asked me privately about, or mentioned about, this imbalance. Have a look at what that imbalance is. All right. I want to draw your eyes to all of these candles over here. Okay. Now, not all of them, but look at these candles here, how the wicks, how they overlap each other. Between these three candles here, we can see they all overlap. They're all inside candles and stuff, all overlapping. And even the candles that start to go bullish, this one here, this candle opens up, and it does open up an imbalance between this wick and this wick. Remember, you need 3 candles to identify the imbalance. This is an imbalance here. Yeah, because the wicks don't overlap. Look at these 3 candles. No such problems. The wicks are all overlapping each other. Look at over here. There is a small imbalance that was in here. Look. You hear people call it a fair value gap. And look how the market came and let's close that up. Let's make that efficient. Just close it up and let's continue what we're doing. Yeah. Look at over here how all of these candles, bar some little ones, they kind of overlap. All these wicks overlap. Over here, we had a little bit of imbalance that was in between here and here. But the market came and closed that imbalance and started going, making its way in this direction. Look, these candles here, there is a very tiny imbalance between here and here. But maybe nothing to write home. The bigger the imbalance, the bigger the attraction. Look at this imbalance. The one I said that the market might come back for. It's between here and here because we have 3 candles. 1, 2, 3. And that second candle has this big ocean where no wicks overlapped. This has a smaller little ocean, little sea in here where the wicks didn't overlap. And these are inefficiencies. If you don't believe me, we do have a little indicator so that you can use. It's called the Fair Value Gap by Spaceman BTC. Watch, when I click it, those same areas that I highlighted will highlight. Watch. See? So I'm able to do that with my eye all the time. But if you're not, there is an indicator. Shows you. Shows you the imbalance. Shows you the imbalance. And therefore, that's always going to be my concern. Look, just now, this big push here has created a little imbalance. And if you understand the market doesn't like imbalances, then that's always going to be your concern. You can't turn around and take this trade and put your stop here. Because you're like, the market likes to close imbalances. There's a very high possibility it's going to come and nam, close that imbalance. Your stop has to be at a place that's going to be safe, the safest place for your stop. Hence the reasons why I said, if I was to get into this trade down here, which I'm not that keen to do so, I'd probably have to place my stop above here. Because this market could very easily say, you know what? Let's go and collect that imbalance over here. So therefore, me placing my stop anywhere else apart from above that level, I'm potentially asking for trouble. All right? And in the same breath as I say that, we might just see this drop to hell. Yeah? At that point in time, it's not, no, Jay don't know what he's talking about. It's no, I took the right decision based upon the information that was given to me that I wanted to be safe and keep my money safe. Yeah? That's it. It's that simple. So here we can see here on a 1 hour time frame, some minor structure has been broken. A little bit of a retracement has occurred and a little bit of continuation has occurred. Yes. My concerns are just on a slightly larger time frame, 4 hour, that we have this low over here, but the market might decide to just rock and roll all the way down here. You never know. Yeah. It might decide to rock and roll all the way down here. This was a high. This was a low. This was a high. This is a little low. This is a high. The market might decide to push all the way down there. And therefore, right now, hitting the button with your stop above that aggressive high might be a trade. To be able to say that you've got an indication below these levels, correction, which wasn't a great correction, and a continuation. Maybe there's going to be someone out here who hit the button like this, and they're going to see this trade rock and roll all the way down below that 4 hour level, which is here. Maybe. But that's still only a 1 to 1.3 trade. You know? And I don't know whether it's worth me getting involved in that 1 to 1.3 trade. I prefer to see this market come back up in here. And when it came back up in here, making a better correction, then I can drop my time frame down to my 1 hour, my 15 minutes, my 5 minutes, and I can see a beautiful break in structure here with the same strategy. All right. Indicating, correcting, continuing. And then I can have a target of at least the low, the first low of where it decided to turn around from. But more importantly, that it continuing and capturing that other structure, other liquidity below the other structure. That's what I'd prefer to see happen. I am definitely not in a rush to go and hit this button right now, despite the fact that we've had an indication, some kind of joke kind of correction, and a little bit of a continuation. I'm concerned about the bigger Russian doll. The bigger Russian doll, its structure is here. So how can I fast myself getting a trade for a sell here, my stop here for a 1-to-1? Now, could it just melt through there? Of course it could have, would have, should have, maybe might do. And if that is the case, that's not a problem, but I would have to place my stop up here on the basis that I'm trying to get it melting through and going to some structure on a bigger time frame. And I just don't want to go and get into this trade as some sort of swing trade for a long period of time with a 242 pip stop. Just don't need to. Just keep my money in my pocket and see what happens. All right, see what happens. So that's my opinion on NAS. But what I will say is this: have a look. If I said that NAS and US 30 have a relationship and they're cousins, yeah, one's the slightly länger cousin, you know, with a with a better dress sense and does her hair a little bit better, yeah, and you know, but they are cousins. They both got this, you know, similar traits. They look similar. All right, let's check it. Superimpose US 30. Let's check out the measurements. All right. See, they're cousins. They're not identical. Yeah, they're sisters. They're not identical, but they do similar stuff. And if I'm looking at NAS and I'm thinking to myself, well, NAS looks like it might want to come down. So which what I was just saying. It looked like it might want to come down, but it might want to close some imbalances first. Maybe it's the same principle with our US 30. That US 30 wants to come down first. But it's not giving me any signals right now to really get excited about. And we understand potentially why. Red folder. A lot of red folder news where the market is chilling. The market is saying, let's see what happens. Or maybe the market's pricing in. Maybe that little push that the indice market's been doing, even though the dollar was doing something else when we looked at the US 30, the comparison, maybe it's because it's just waiting for these red folder news happening today. Then we've got tomorrow, we've got some GBP red folder news. We've got some loads of more US 30 red folders. Remember, there's always red folder news. Don't get twisted. This isn't like a one-off. There's always red folder news, and therefore there is always this dance happening between, you know, consolidation, impulse, retracement. Yeah, because the fundamentals drive the markets. And sometimes the markets price in what's going to happen fundamentally, meaning that they start moving towards an area because they know that there's a high possibility that those CPI data is going to come out high or come out low. So they start pricing in. It's like, imagine that you knew, let me explain it in another way. Imagine that you knew that your Air Force One's prices were going to go to the roof because you just thought to yourself like, I don't know, God forbid, I don't want to talk this, I don't even say that. But let's imagine that your favorite sports star who endorses a trainer, or that's the reason why his trainer was, I don't know, was sick. And you're anticipating that if, for God forbid, anything happened to my man, his trainers are going to go through the roof. You know what I mean? Yeah. So what you'd start doing is you just start slowly but surely buying up as many of those trainers. You wouldn't want to do it in one big go. Because if you do it in one big go, everybody else is going to start charging massive P because you're going to bought 100 of that pair or 1,000 pairs of that market. You're going to push up the market. You've created this demand. So slowly but surely you start pricing it in. Instead of you buying 10 at the end of the month, you just buy 20. Instead of you buying, 30 at the end of the month, you buy 50. You're getting ready. You're pricing in the fact that you've done your research and you understand that homie's not going to make it. Just understand these big institutions, they have whole floors of guys sitting there in corduroy pants, white socks, thick glasses, no kids, no car, don't like football, don't like anything. All they want to do is analyze data. They love it. Yeah, they've got long hair. They play, I don't know, Minecraft on computer, and they analyze data. And they've already priced in the fact that this is what they think these markets are going to do based upon these news events. That's why sometimes these news comes out and you don't see no mad volatility, because the markets have already priced in that information, unless they come out way outside their expectations of what they priced it in. And we've seen that happen in certain instances. So this information is showing us what it previously was. It's showing us what the consensus is, what people think. However way they work it out would be quite interesting to know how they work out the consensus. Now, maybe that's something, you can do a little research into how they work out the consensus. Yeah. And then it shows the actual result that comes out. So people think that this is going to come out at 188, 1,880K, whatever that means. But if it comes out at 3,000, that's going to be way above the, the actual consensus. Yeah. And that may have really dramatic effects on the markets, especially if that market is USD related, and most markets are USD related. Yeah, like CHF, Swiss franc red folder news might not have a tidal wave effect on US dollar because it's a smaller Russian doll. In comparison to US dollar, it's just a smaller guy. It's not a boss. US dollar is the last boss at the moment. When it sneezes, the world catches a cold. That's why we pay special attention to USD news opposed to, I don't know, AUD news. Like, maybe if you trade AUD JPY or AUD CAD or AUD, then that's different. But most people are trading US dollar pairs or indexes, all right, US indices, all right? So that's my opinion on that as well. We can see this market coming down here. We're kind of in the middle of this range. I don't really love it to pieces. So NAS, I was looking at, in a smaller time frame, I was saying that, look, we've kind of broken some structure, bearish, made a little kind of a weird kind of retracement in here. Well, not too substantial, closed a very small imbalance. And then we got a continuation here. But we might see with the news, have a look. The news might do this, spike in this direction, only to start coming down and doing this. And if it did that, it would make sense because it came when it closed an imbalance. It would make sense. And don't get it twisted. Let's measure that out. From here to here, it's only 150 pips. This market definitely has the capacity to, it has the engine size, the horsepower to be able to do 150 pips in its sleep. No issues. See, some markets, because of their average true range, yeah, of how much they move on average per day, can't do 160 pips. They only move, 50 pips a day. So therefore, you're like, is this going to happen today? Possibly not likely unless something really dramatic happens. But NAS definitely has the capacity to go all the way up in here and do it quickly as well. Like this, boing, and then decide it wants to start doing that. Yeah. So personally, I'll wait. I'll pop some alerts in here and I'll wait patiently to see what happens. I'll get on with my day. And if it rings, then I'll have a look. And this is a way that you might trade. Because remember, you have to work out how you will trade. Are you somebody that's in front of a computer? Are you somebody that's going to be constantly looking at your phone? Are you somebody who you'd like to place a trade in the morning and come back and check on it in the evening or the next day? Do you just, therefore, you're going to have to change the fact of your expectations. Maybe you just want to make 1-to-1, 1-to-2s because your zone, have a look, your zone, your entries like this, and you do have a 250 pip stop. And therefore, you're just happy because the market's not going to go for forever in your direction. You're just happy if we get down to this white line, for argument's sake, and you make a 1-to-2. And you take that trade, and once every couple of days or every few days, you see whether or not you made a 1-to-2, meaning that you risked 100 quid and you made 200 quid. Or you risked 1,000, made 2,000. Obviously, it's a lot more interesting when you've got a bigger account and you list 10,000 and 2 days later, you made a 20,000 on top. Okay? But when you've got a smaller account, you're day trading, potentially you might be looking for better metrics than that. Or at least metrics that play out quicker. 1-to-2 is not a problem, but I don't know if I want it to be taking 2-3 days of my life. If you've got a small account. Yeah, if you've got a bigger account, cool. I'm gonna risk $1 million on the basis that in a few days' time, I might make $2 million. Okay, cool. That's not a problem. On a smaller account, maybe you're better off to try and find a bit more, opportunities that are going to play out within the day, so that you can be able to judge your trading and judge the markets quicker than you sitting around it for 2, 3, 4 days or whatever it may be. All right. So, and once again, guys, yes, this has made an indication. Yes, there has been some small type of correction that I'm not over the moon about. But even if I got in this trade and it started to push down here, I'm very concerned about it maybe turning around here, and I'm concerned about this news. Cool. I'm going to move on once again. All right. I'm flicking through. I'm going to go and look at, let's go and look at Bitcoin, BTC USD. All right. I'm going to look at it in Coinbase, and I'm going to once again do what I do best. I'm going to zoom out and understand what that bigger Russian dollar is doing. In fact, I'm not even going to bother. All right. Because I'm going to bother. All right. Let's do that. Let's go to our weekly. Let's understand Bitcoin. Okay. So you can see why Bitcoin people are quite excited, and they think to themselves, like, Bitcoin has the potential to, have a look, watch this little line I'm going to put here, get up into these levels. When you hear people talking about, yeah, man, Bitcoin's going to 100,000, because this is what they're thinking. They're saying they've seen it's previously pushed up in here. We're breaking structure bullishly. And maybe, look at this trajectory of this line here. Watch it. If I extend it to the right, they're thinking to themselves that it's possible that Bitcoin can do this, look, and get up into these levels. What is this? This is like 90,000. Yeah? That's what they're thinking. Yeah? Possible. At the moment, we're kind of in the middle of this bigger range, which I'm not over the moon about, which we all know right now, because at the same breath, there are people online and quote-unquote gurus that believe, no problem, Alice is going to have to leave, love and leave. Very informative. Oh, that's Alex, no problem. Yeah. So at the end of the day, we can see here that there are people here that believe that Bitcoin is going to fall all the way back down to, I've heard someone talking about $10,000, $9,000. All right. Now everyone's got an opinion. All right. But the reality is I can only assess it from a technical perspective and understand what's happening on a fundamental level to try and make some decisions. We can see how this Bitcoin market accelerated and price broke outside of this trajectory. It accelerated like so. And we knew that was potentially because of the SEC's, the ETF decisions and stuff like that, of, it getting certain type of confirmation, certification in regards to Bitcoin. And we saw people getting quite excited again by a Bitcoin rally, okay, which this is where we are right now, all right? And we're looking at it and we can see structure to the left-hand side. Have a look at structure. You can see structure to the left, all right? You see structure to the left, structure to the left. You can see some structure to the left. And the market is pushing up and breaking some of these levels. But we also understand that when it captures liquidity above these highs, that we might see runs in the opposite direction, okay? But at the moment, have a look on the daily time frame. Bitcoin has been going for it, at least for the last 1, 2, 3, 4, 5, 6, 7, 8. Last week, it's been going for it. What did it do? It tapped the bottom of our range. What a coinky dink. All right. And then from down here, have a look at our strategy. Have a look at the unity strategy, understanding it solidly. I'd have to draw my line like this. Okay. I'll be knuckling down. Look at it on a 4-hour time frame. The market came down here, started to consolidate. Look, pushed all the way down in here, then decided, you know what? We're thinking about it, Jay. We are thinking about the move. Started to consolidate. Let's drop our time frame down to an hour. And let's have a look at that consolidation. All right. Pushed up into this level. Started to just about broke some structure over here, but decided to consolidate before it closed above. So look, it broke some structure here. Have a look. This is some structure here. If I was to draw another line, it'd be looking kind of like this, at this angle, touching that last high before this lowest point. Okay, and it just about, let me zoom in so you can see it. Just about had a closure here. Can you see this candle here? Closed above this structure here. Closed. And then it decided to start pushing back down into these levels here. And for all purposes, let me go to a 4-hour, because that might be better to see a 4-hour close. Yeah. You can't even see a 4-hour close. It's all a bit wicky. Let me go back to my hour. Sorry. All right. Let's go to my hour so we can see it. The market was just dancing around in here. And ultimately, what you're waiting for is an indication, a correction, a continuation. That, to be fair, there's 2 entries here. There's one that's here, but there's lots of entries, a smaller entry also that we can look at. But the market pushed up into these levels here. I'm going to put my line, my box like this. Now I can zoom in, get more information, like so. That indication, correction, continuation came all the way over here, which is annoying. An aggressive entry would have been like this, but you'd have to take into consideration the imbalances, especially the immediate one below. That could have been an entry. A safer entry is, yes, placing your stop below here, but it's quite large. But let's just say, for argument's sake, boom, you place your stop like this. Well, you did okay. All right, you did okay up to that level. That's a 1 to 2.8, 1 to 3, you might as well say. And then the market started to do the hokey cokey. But ultimately, if you bought at the bottom of that range, you could have decided to stay. You could have decided to make this trade risk-free. Yeah, like so. Placing your stop there. And you could have just said, let's see what it does. And what it did was blew up. Yeah, pushed towards previous highs. All right, because that's a structural level, that previous high. And have a look. Nam, 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 nam. Now, I'm very concerned by the way in which this market pushed past that high. Because as it pushed past that high, what did it create? If anyone can see. As it pushed past that high very aggressively, this high here, and we'll move this yellow line. As it pushed past that yellow line, what did it create very aggressively?
Big imbalance.
Big imbalance. Created a big imbalance that at the moment, for all we know, that market is just thinking about it. It's sitting there thinking to itself like, bro, you know, we left all that inefficiency below. And someone saying, I don't care, man, let's keep going up. No, but we left this inefficiency below. I think we should go and collect. No, we want to keep going up. Are you sure though, bro? Because, I mean, think about it. Remember, we had a comparison about this being a battlefield. The battlefield was here. Look at the battlefield. This was the battlefield. It was here. All the way across, historically. 1 second. Historically, this was a battlefield. This was a historic battlefield, this level. Okay? And when the market came up here before, bang, it got defeated. Big slap. Slapped it all the way back down here. And when the market get back over here, it was fighting and it couldn't defeat the enemy. Yeah? So Alex picked up his phone and said, you know what? I'm going to phone my cousin. He's got the big guns. He's got lasers. He's got sound weapons. He's got, I don't know, some different kind of weaponry. And I said, is it really? Yeah, bring them. Bring them because we need to get past this area. And he goes, no problem, I'll make the phone call. And he made the phone call. And let me tell you what happened. Have a look. They brought out the big guns. And they smashed through this level with speed and strength. Yeah, a level that they couldn't previously get past. It was a battlefield. And over here, look, they celebrated. That's why there's some consolidation. They celebrated. They was tired. They was like, wow, we did it. We made it. And they started to kind of go sideways in here whilst they, you know, they was celebrating. But Brenda, who is experienced, who is a warrior, been on many battlefields before, says, I hear you. And I can see the celebration is happening. But we do have to be concerned that, A, we left some of our own, compadres, our own teammates on the battlefield here. Yeah. And plus, maybe we didn't get everybody here. And we don't want these people, maybe they was hiding in the tunnels or in the houses or underground. We don't want them getting up, picking up the grenade launchers and coming up behind us and defeating us. So the markets like to come back after causing these imbalances, after breaking new territory and close these imbalances, check for their fallen soldiers and make sure there ain't none of these enemies trying to get up. That's why you see, remember, have you ever seen war films? Especially the old ones where they used to have swords. And then you see after the battle, there's guys that's on the field with their little spears, just walking around and just juking the enemies, making sure that they're dead. Just walking around all of them. We've got a wriggler over there, he's wriggling. Go and juke him. Let's get rid of him. We don't want him getting back up and poisoning our food or running back to the enemy and telling them, you know, what we've done. They go back to the battlefield after they've taken that land and they go and they help their fallen soldiers. Maybe one of their people's lost a leg. Let's pick him up. Let's get him sewn up. Let's get him back on the battlefield. Yeah, let's give him a little bit of Jalof. Yeah, and a little Vicks vapor rub and get him back on the battlefield. Yeah, but for the enemies, they go and they make sure they're dead. And this is what the market does all the time. So right now, I'm a bit concerned that we broke through this level with strength and speed. And now we're seeing a little bit of sideways action, a little bit of, should we? Should we not? Should we? So I wouldn't be in a hurry right now to just go and buy Bitcoin. Maybe if Bitcoin did this, have a look, came down here, closed up this imbalance, and then I started to see it breaking structure, I might say, yeah, well, Bitcoin's going for it, mate. It looks like it's going to keep, especially if there's other factors. And I might decide, yeah, I'm going to buy Bitcoin here. Now, buying here isn't better than if I bought all the way down here, but unfortunately, I can't go back in time. So maybe I'll say, I'm going to buy here, and if we get back up to these levels, then maybe I might take my money, because you can trade Bitcoin as well as invest. But there are some people that believe that Bitcoin is going to do this: break structure and start coming back down here. Yeah, for various reasons. Just go Twitter, just go on Instagram, have a look at all people turning around and telling you the reasons why they think that's going to happen. Okay. But either way, I don't really care about their opinions. I'm a technical trader, and I'm going to trade what I see. And at the moment, I'm looking at this, and I can't see a reason that I want to jump into this trade right now, especially with all of this concern down here. Does that make sense of what I've just said? I want it to make sense, because what it means is that when your mate stops you in the toilet at work and goes, yeah, I'm going to buy Bitcoin now, you go, yeah, kind of in the middle of a range, yeah, kind of consolidating, yeah. I think that it's at 50,000 or around this kind of level now. I'm thinking to myself, really, at what, best case scenario, we might see it drop down first to 48 or whatever. I might wait. Let me wait, see what happens. Even if this market comes and breaks out here, have a look, and starts pushing up here, you're still going to be a bit concerned that you're buying at the top of a range. And I'd say to you, maybe you'd wait till it comes back down here. Yeah. If you're investing long term and you don't care, well, that's different. If you believe Bitcoin has done some major things, but that's different. You're just going to invest in at a price that you think is of good value. All right. But if not, you have to be concerned by, where we are in these markets. And the whole markets across the board seem a little bit concerned, a bit slow, a little bit, we're just watching it. All right. Any questions, guys? Any questions? We've gone 10 minutes over. I'll start a little bit later. Any questions? Any questiones? I want to see more people on the Breakfast Club, man. I'm going to be reaching out. Guys, don't forget, to invite people to us. We're going to have an evening session again. We're trying to work these evening sessions in. I'm just deciding what we might do, guys, is we might have just 3 breakfast clubs in the morning and 2 evening sessions every single week. All right. That's what we might do. There'll be other sessions in between that gap, but in regards to trading itself, that's what we might do, just to make sure that we capture the people that can't go in the mornings. I know how difficult it is first thing in the year. I mean, first quarter of the year, and people just trying to get to grips with life and do certain things in the morning. I know, because they've reached out to me and begged me for evening sessions, because it's very, very difficult for them to get in the morning. I understand. All right. I'm going to play something from the Wall Street Trapper this morning for you guys to watch, and it's about you've been trained to be broke. All right. The Wall Street Trapper, someone who's actually I speak to on Insta, like direct. We have conversations. Loves what we're doing over here. All right. And at some point in time when we are ready, there's going to be a great collaboration that can happen once it doesn't get too big and stops taking my calls, my messages. All right. But let's see what he's got to say in regards to you've been trained to be broke, the Wall Street Trapper and Jaspreet Singh. I'm going to wish you guys an absolutely fantastic morning to go and fulfill your potential. Have a great day. And hopefully we've learned something this morning in the markets. What have we learned? We're learning, we're waiting. We're seeing what's happening. 1:30 is going to be interesting to see what happens in the markets. There's lots of red folder news. But guys, good morning. God bless. I'm going to watch this Wall Street Trapper video. All right. For the people that are watching us online, do like, subscribe, share, blah, 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 blah. And if you want to get involved, you send me a message. All right. But guys, have an absolutely fantastic, fantastic day.
This is how the wealthy play the game of life. Not in survival mode, but in offense.